So we are officially in a bear market. This week, S&P 500 hit the 20% loss limit from its 4,800 high, dropping down to 389. And Tesla stock got kicked out of S&P 500. We need to talk about this. Hey, what's up YouTube? This is Foxtel Digital coming to you again with Black Girl Stocks, and this is another segment of our top 3 option plays this week, where we're just gonna go over a few different trades, stock fundamentals, and different strategies that you can do to make it through, okay? If this is your first time watching this video, please make sure that you click that thumbs up button for me. It really helps the channel. Also subscribe and click that notification bell so that you get notified anytime I upload a new video for you guys, okay? And just to recap on last week's trades, the 3 stocks that we were looking into were Lyft, Disney, and Tesla. It was a no-go on our bullish Lyft $20 call expiring on the 27th of March. Market Monday open, Lyft stayed below our entry target price of $20.25. And also shares of a lot of different companies in the industrial sector are trading lower because of the overall market weakness due to high inflation rates and the Federal Reserve increasing interest rates. These are going to be companies that produce machinery, equipment, supplies used in construction and manufacturing and different services in those areas. So a lot of these companies are very tied to the economy, and historically they fall during recessions, which it looks like we're, pretty close to heading towards. Yeah, that was a no-go for Lyft. Next was Disney. Now, our Disney $100 puts expiring on the 20th of May were a yes for the beginning of the week. All right, so shouts out to my options trading Discord group because that's where this trade came from. Now, this was a position with a shorter expiration date, and it was within the week that we posted it. So it was on the 20th and we posted it last week. Now, those trades are going to need to be closed quickly. If you're up 30 to 50%, take those profits and close that trade, because these stocks are going to be more sensitive to time decay. If you held it through this up on Tuesday, there were some profits to gain on Wednesday, but honestly, any profits that we received on Monday's drop would have been great for Disney. And if you're worried about doing too many day trades, make sure that you watch this video that I have on how to bypass the pattern day trade rule. And next was Tesla. Beep, beep. Is that my bestie in the Tesla? Yes. Okay, so we were looking at calls and puts on Tesla just with the volatility in the market at the time. Now, on Monday, Tesla passed through our $760 entry price pretty quickly, and it actually dropped $40 that day. So if you had any puts on this for a day trade also, then those did very well. Now, as far as Tesla goes, apart from the bear market that we've seen in general, Tesla stock fell almost 14% last week because of slow production in Tesla's Giga Shanghai plant, Elon's up and down with this Twitter deal nonsense, and reports of a settlement over a sexual misconduct from 2018 with Elon and somebody that was working there. And then also, this just came out on Wednesday, Tesla was just kicked out of the S&P 500. Now, this is an index that lists companies by how they affect the planet and also how they treat their investors and employees. Now, their reasoning for removing Tesla was lack of low carbon strategy because of their codes of business conduct, racism, and poor working conditions. And well, I don't think a lot of people are going to argue with that just based off of, different stories that we've heard coming out of Tesla's work environment. So let's get into this week's plays. All right. And the first stock is AAPL. This is Apple, trading at $137.59. Just looking at the stock chart, you can see that Apple has been in a pretty strong downtrend for a while, since about April, since the beginning of April. Now, this is short term. This is on the 4-hour chart, but we've been in a strong downtrend since late March. We are trading below our 50-period moving average here, so that is this white line here. And a lot of times with stocks in a downtrend, they do tend to migrate back to the moving average. Okay, so I think I heard that somewhere they were talking about Bollinger Bands. The stock is always going to move back to the moving average. So that's something that we can possibly see short term. Even with this long term bearish market that we're in, you're going to see a move up. Apple's been very very volatile and trading 19% lower this month with the Federal Reserve's 50-point rate, and because of anticipation of even more interest rate increase. So long term, Apple is anticipated to continue dropping. Short term, it wouldn't be terrible anticipating a move back up to this 50 period moving average here. That's about $145. Right now we're trading at 137. Now going to the daily, I want you to look at this last candlestick that we have here on the closing on Friday. Now, this looks like a possible reversal candlestick. Okay, so this is a hammer. And according to this article, a stock often signals when it's at its lower low by printing a reversal candle, such as a doji, bullish engulfing, or a hammer candlestick. On the daily, it does look like we have closed with a bearish hammer, and that candlestick color doesn't really matter. Even though it's red, the color on these reversals doesn't really carry as much weight as seeing that actual hammer. It's going to be a bullish signal, and for us this might be more short term, but still a possibility of a quick movement up. If I was anticipating a short term move up to that moving average of about, what was it, about $145, another 50 period moving average here. So that would be around 145 here. This is our 50 period moving average on the daily chart. So that is something that I would want to see if I was going to anticipate a short-term movement up back to that moving average. But on the downside, for the long-term trend, if I were going to look for a bearish entry, I would want to have my entry around 135. And the reason why I would want to have my entry probably around 135 if I was going to enter a bearish position in that trend continuation that we've been in. Okay, so for Apple with the calls, this is going to be something really short. So I'm going to go with the June 3rd expiration date, and I'll pick the $140 strike price. So you can see here we have very high volume, very high open interest, and our premium is pretty decent. Great theta, 0.4, and our delta is, it's okay, it's low, and we have a low implied volatility around 36. So this looks like a pretty good position that we can get into for the calls. And like I said, this is going to be short term. And on the long term, for the bearish position starting around 135, I would want to pick something a little bit further out, probably the 27th. Honestly, I would either be between the 130 and the 125 strike price for the premium on the June 17 puts. Just looking at both of these, they have a very high open interest and volume, but the only difference here is going to be your delta. Okay, so with the price movement of the stock, we have a stock that does tend to move pretty well. And with your delta, that's going to be the value that your option is going to gain as that stock price moves. So if you want to gain more value with your option, then you would want to have one that has the higher delta. So that would be the 135 strike price, but that one's also going to be more expensive. So, but it's about $100 difference, but it's going to be more profit. So that's something that we can do with Apple. Okay, and the next stock is BABA, that's Alibaba, and right now it's trading at $86.79. Now, Alibaba actually has an earning report coming up this Thursday on the 26th, so this is going to be an earnings play. With the bans in China over the past few months and possible forced delisted in the United States, their earnings may show some effects of that. Now, Truist analyst Yosef Esquali cut Alibaba's price target from $180 down to $132 a week before earnings. Now, consumer spending has dropped so much so that China's commerce revenue is the lowest that it's been in 10 years. This is critical for stocks like Alibaba because they depend on clothes and cosmetic sales more than anything. So the outlook is really weak for them. Wednesday, another China media stock, Tencent, reported their earnings loss, and after that, the stock dropped 6.5% like that. So we may have a similar effect with Alibaba. And just looking at the actual stock price, we've been in a downtrend. We did have a slight move up last week, but overall we are still trading below our 50 period moving average here on the 4-hour chart, and definitely our 200 period. We can see during their last earning, the stock had a drop, continuation of that drop. Their last earning, the stock had a continuation of that drop. The last earning before that, the stock had a continuation of that drop. So we can see what happens going into this earnings report, okay? And you already know when we're doing earnings, we do anticipate there being a higher than normal implied volatility. I'd probably be more comfortable doing a call credit spread, which is a bearish position that's going to gain value as the stock drops, okay? For me, going into next week, if I'm going to have an entry for a bearish position, I'm going to have my entry set around $85. So right now we're at $86.79. So once we kind of start to see that stock, and this is on the 5-minute chart, but once it starts to move below this 50 period moving average here, then that would be a good indication that we're continuing in that downtrend. So that's when I would definitely enter that position. So with Alibaba, we're going to go over here, make sure we're in our calls, and we're going to go to the vertical spreads. Now, normally with the earnings positions, you're going to have an expiration date that's a little bit closer to the actual day of the earnings, so it's on the 26th. But you saw what happened the last time when we did that position on AMD, so just be careful. And so the position that we're looking at actually has a 70% chance of profit, so we'll see what happens with this one. But what we're going to do is we're going to sell the 94 strike price and we're going to buy the 95. And one thing here, you can see our bid and our ask is a little bit wide here. We can get a maximum profit of $30 per contract on this position, okay? So right now we're anticipating Alibaba staying below $94. So right now we're trading at 86 and we've been in a strong downtrend for a while. So that's something that we can do for that earnings. Okay, and the last stock is XOM, that's Exxon Mobil. Right now it's trading at $91.86. Now, apart from Exxon being in one of the top trading sectors, the energy sector right now, the stock has been uptrending. Right now it looks like we're at a resistance point. So we've hit this resistance here around $92. We actually hit it during after hours back on the 18th, and we're back at that position. So there's only one of two things that can happen: that we have high volume going into next week and continue to move above that resistance, and it looks like we actually broke that. We hit that high of 93.58, so we actually moved above that, but we moved back down. So if we continue with strong volume going into next week, Exxon Mobil could continue in its uptrend. Just with what's going on geopolitically, or the ban on Russian resources, is going to skyrocket the value of energy stocks and materials and resources and things like that. So in the near future, XOM could continue in this strong uptrend that it's been in. So for me, if I was going to have a bullish entry for XOM going into next week, I'm going to have my entry around this $92 here. And actually, this is where the super trend indicator is. So once we pass this 92 area, then that would be a great indication that we're continuing in that uptrend, and even better would be 93.71. But that's a couple of dollars away from where we are now. I'm going to be in the calls, and I'm going to look at the June 17th expiration date. So that gives us almost about 30 days to see what can happen with this stock. And we can look at the $95 calls. You see we have $3.5 thousand volume on Friday, $26,000 open interest, so it's really high. And our delta is pretty cool. It's close to 0.4, so that's okay. And our theta is very low, so this is a really good position. Low implied volatility, so this looks like a good position. The $95 call for XOM if we continue to move in this upward direction, okay, with the stock. That's going to be it for this video. Thank you guys so much for checking this out. Make sure that you click that thumbs up button for me. Leave a comment below and let me know which one of these positions looks the best to you, and I'll catch you guys in the next video. All right, bye.